Did you know that it's actually possible for your life insurance policy to be too good? I'll actually break down what I'm talking about here in just a second. My name is Jake Williams, and I'm a life insurance specialist with Step Up Wealth Management. For more information on life insurance or the role it can play in a comprehensive financial plan that is tailored to you and your goals, be sure to subscribe to my channel and hit the notification bell. That way, you're notified immediately anytime I upload a video and you never miss one. So you hear regularly, or at least I have, maybe you haven't, of the idea of if it's too good to be true, it probably is. And that's especially true whenever taxes or the government is involved. So, what I'm talking about is life insurance policies and ways they try to limit what you can do with them. Um, and it's a three-word phrase that life insurers hate, and that is the Modified Endowment Contract, or Mech, as we call them. So, a Mech is a permanent life insurance policy, a cash value life insurance policy that is funded too much. There's too much money put into it, and the government says that they believe you're no longer using this for life insurance. You're trying to use it to take advantage of the life insurance rules and use it as an investment vehicle. And they don't like that. Most specifically, they don't like that they're not getting the taxes out of it that they want to take. So, what happened is they established a law back in the 80s where if a life insurance policy is funded too much, especially in the first few years, they can call it this modified endowment contract or a MEC, and it changes the tax rules on it and it takes away a lot of the tax benefits of that life insurance policy or the cash value of the life insurance policy. You can still pass on that money to your heirs without the taxes as long as all of the requirements are met on that end, but it's really to you, the investor and the insured, that there are the tax limitations. In a modified endowment contract, any money that you withdraw from the contract is taken from the earnings first. And the difference on that is in a traditional life insurance policy, in a traditional cash value life insurance policy, you can take your contributions, your basis first. What's the difference? Well, if you're taking the basis, there's no tax on that. But if you're taking the contributions, there's taxes on those gains. So in a modified endowment contract, you have to eat through all of the gains and pay taxes on all of those gains and potentially a penalty as well if you're taking it out before age 59 and a half. You have to pay taxes on all of that before you get to any of that tax-free income. That's kind of ruins the point of why you might be looking into a cash value life insurance policy. But that's what they established this rule for, is they were trying to keep people from overfunding these policies and dumping so much money into there and then turning around and taking it out. Hey, it's tax free. No, they're trying to keep the life insurance policy a life insurance policy and not an investment vehicle. So, how do you make sure that your life insurance stays away from being a mech? That's probably the number one question you're asking. And it boils down to what's known as the 7-pay test. So they calculate based on how much death benefit, how much coverage you've got on the life insurance policy. What would it take? What would you have to pay in the first 7 years to consider that policy entirely paid up? You pay for 7 years, you don't pay another dime, you've got the coverage the rest of your life. How much would you need to pay in those 7 years? And that's the max limit that you get. That's as much as you can contribute in 7 years. You go over that, the policy is instantly a mech. And once a policy is considered a modified endowment contract, there is no going back. You can't trade it out and trade it back in for another life insurance policy and take away that modified endowment contract status. Once it's a mech, it is locked in as that for the rest of your life. So, if you're looking to take advantage of a life insurance policy and use the cash value to your benefits, you need to be aware of those Mech limits and make sure you don't cross over that 7 pay threshold. And the math on that can get kind of confusing, and there's ways you can adjust here and there, and how much do you contribute in this year versus that year to be able to stay within that contract. But please don't try to figure that out on your own. Sit down with a professional and make sure. Don't guess, don't hope, be absolutely sure that your contract is not going to go into that Mech status. Now, there are instances where you might want to dump a lot of money into a life insurance contract up front and end up purchasing what would be considered a modified endowment contract, but those are very limited and specific circumstances. And even then, you need to be aware of the consequences of it being a modified endowment contract. Um, those few instances, that's going to be where if you're sitting down with a professional, they'll say, hey, here, you're going to run into this issue where if you try to take money out of it, you're going to get hammered. But most often it's something where you're not going to be trying to take money out of it, take money out of that cash value. But really, and what I'm hoping you get out of this is, please talk to a professional. Don't try to do this yourself. If you're looking for just term insurance, talk to a professional. They make it quick and easy. But if you're looking at anything with that cash value, please, 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 please sit down and talk with a professional, because you could end up paying extra taxes for the rest of your life because you tried to take too much advantage of a good thing. So sit down with a professional, make sure that the contract that you create is going to stay away from this Mech limits, and you're able to take full advantage of what can be a really, really awesome setup. All right. So if you found this information helpful, give me a thumbs up. Lets me know that I'm getting you guys the information that you want to see and that you want to hear. And it helps YouTube know that I'm getting you guys good information as well. If you've got questions, hey, why do we do this? How can we set that up? What are things that we can do here? Drop me a comment down below. I would love to hear the kinds of questions you have, and it lets me know new ideas for new videos. But most importantly, if what I was talking about today seems like something that you might be interested in or interested in avoiding, there is a link in the description below where you can apply to become my client. All right. Check it out, click on it, we get through some fact finding, and then you and I sit down and we figure out, what do you want? What do you have? What do you need? And then we figure out what we can do to move you forward. But please take care of your now, your future, and beyond.